Hey guys, and welcome to the Working Money channel. I had a dream last night and it's just coming back to me where I tried to say the hey guys and welcome to the Working Money channel phrase and I couldn't get it out right. It just didn't sound correct. It was a bit of a nightmare. Anyway, Mags here on Twitter posting this Bitcoin bull market comes in 3 phases, guys. And we got to remember this, okay? The bull market is coming. It's almost there. Right now, we are in the reaccumulation phase. And so make sure you guys are getting into all your positions right now. You had a year and a half, almost 2 years to save up your hard-earned fiat to buy cryptocurrencies, and now is the time, guys. From December of 2022, that was the optimal time to buy, right in around here, the bottom. We did see that rally at the beginning of 23, but guys, now is the reaccumulation phase. This is kind of, the last hurrah before we start to see higher highs. I'm going to be posting a few updates for my patrons within the next few days, so probably one today. And I'm going to be posting some interesting content next week. So that's for the patrons, patreon.com/workingmoneychannel. If you guys are interested in following me on my trading journey. I'm personally still looking at some other coins that I'm going to be diversifying into in this crypto bull run. And guys, there isn't that much time left. So this is the accumulation phase. We got to remember it comes in 3 phases. So the bottom formation, max pain, which was December 2022, reaccumulation, slow and boring. And that's kind of where we're at right now. I feel like, the crypto space is very kind of lukewarm on, anything. We want to hear moon targets. We want to hear, positive, XRP is going to whatever, 10,000 a coin, $589 a coin. This is what people want to hear. Realistically, right now, this is the time to drill down, find the money. Obviously, do not invest more than you can afford to lose. And by no means is any of this financial advice. But now's the time to be drilling down and accumulating those cryptocurrencies that have the potential to make you a lot of money. And then the third phase is easy money, the bull market rally. And guys, 2024 is just around the corner. So the bull market never comes easy in every cycle. Prices go through the first 2 phases before reaching the third and final phase. Phase 3 is when most people hear about crypto. It's all over the news, so on and so forth. And guys, we don't want to be those FOMOers. I haven't put it this way, or at least not in a while. We want to be on the other side of the trade from the FOMOers. So as soon as the FOMOers come in, that's when we're going to be selling our cryptocurrency. Exit liquidity, dumping on retail. We want to be on the same side of the trade as the smart money. So this is what I talk about on my Patreon, patreon.com/workingmoneychannel. Market has seen a bit of an uptick today. Bitcoin trading, first time in a while, above $27,000. If I throw this on the hourly, you guys can see Bitcoin over the last day or two did make some new highs. So we are seeing a spark in the market. XRP is also witnessing a spike in activity here. Take a look at that volume compared to, what's happening now. Lower volume now. The low volume is actually resulting in quite a swing up for XRP. XRP up over 3% just over the last day. So, on this low volume, kind of an interesting observation here. XRP trading above 51 cents. So maybe we're seeing a bit more pep, albeit when we zoom out, there's still a long ways to go. And we could still see lower lows before we get there on the shorter time frame. Market cap hasn't really moved too much. Bitcoin dominance hasn't really moved too much. You know what has moved, though? The fear and greed index is up a few points in the 40s now. It's been in the 30s for a while. And we can see it now reflected on the chart. I feel like, with the fear and greed, I feel like, the more days in a row that we see positive news, positive activity, the market goes up a little bit. That is when the needle moves. I feel like it takes a few days for people's sentiment to kind of really find their footing, their confidence, I guess, in crypto. Over the last 24 hours, we've seen Bitcoin up 2%, Ethereum up 2.8%, XRP is up 1.68%. So all positive numbers here. Solana's even up 4.79%. Same with Tron, 4.65%. So mostly cryptocurrencies are faring quite well. There are still a few in the red. Nevertheless, this is all very positive, guys. And the sentiment is really showing. And so here's what's happening with regards to blockchain transactions as a whole. Michael Branch bringing this to our attention. Now, a new bill in the US is to require firms to now report off-chain transactions to the CFTC. So in terms of regulation and in terms of, our focus has pretty much been on the SEC. Looking at different crypto tokens, obviously, trying to distinguish which ones are securities, which ones are not. But there are a lot of other regulatory aspects that we haven't really been following too much. This is a new one. The new legislation aims to protect crypto investors from disputes, manipulation, or fraud potentially stemming from transactions occurring off-chain. So a new bill in the US aims to require cryptocurrency service providers to report all blockchain transactions to a government repository. So this is introducing the Off-Chain Digital Commodity Transaction Reporting Act, requiring trading platforms to report all transactions to a repository registered with the Commodity Futures Trading Commission. The new legislation aims to protect cryptocurrency investors from disputes, manipulation, or fraud, potentially stemming from transactions occurring off-chain or transactions that take place beyond the blockchain network. So they are framing this as something to prevent manipulation and fraud. This does, to me, sound like another surveillance tool, or could be used as a surveillance tool. I mean, you be the judge. Unlike on-chain transactions, off-chain crypto transactions are not instantly logged on the blockchain, but are processed through secondary layers, thus creating some difficulties in being tracked. With the emergence of trading platforms and a desire to increase transaction times and lower costs, thousands of transactions occur off-chain and are unrecorded on the public viewable blockchain, the announcement notes. So here's a quote. Unfortunately, internal record keeping among these private entities can vary wildly, and this can leave investors and customers vulnerable to fraud and manipulation. This bill is a common sense measure to restore some transparency and confidence in the digital asset market. I don't know how I feel about this, really. I mean, I guess off-chain transactions, depending on the application of the transactions and, once the regulation comes to pass, I mean, there's going to be so many more applications for cryptocurrency. Obviously, that comes with a whole other slew of things that need to be done. So, I mean, I guess it makes sense in traditional markets. It makes sense because, well, you don't want to be defrauded. Transactions are usually traced. However, when it comes to cryptocurrency, I get it. How, some of us can, myself included, how we can become a little testy when it comes to tracking everything and report. I mean, not so much tracking it, but reporting it all to the government, especially if our identities are associated with these crypto addresses now with KYC protocols, so on and so forth. Anyway, that is, another piece of legislation that's coming down the pike. Wanted to thank Michael for bringing that up. Stuart Alderati came out yesterday discussing what happened to Gary Gensler in his testimony from the other day. Guys, I did a video on Gary Gensler, some highlighted clips of what happened. Boy, he got roasted by Congress. I'll link that video up here if you guys didn't catch it. Well, Stuart Alderati came out basically saying this. Alderati has been spearheading Ripple's court case, as we know, hinging on whether XRP constitutes a security in the U.S., but he said the SEC chair smugly evaded question after question, which, if you guys saw those clips, boy, weren't they a delight, posted by several congressmen during the hearing. However, the Ripple CLO singled out a moment during which the SEC chair was faced by questions posed by Representative Richie Torres, who represents New York's 15th Congressional District. So here's what Stuart Alderati said, a must-watch. For hours, Gary Gensler smugly evaded question after question, even laughing about how rich he is, until Representative Torres took him out with a command of the law and a touch of South Bronx street sense. Gensler didn't know what hit him until it was too late. And I have the clip up here. It's about, it's over 5 minutes long. Again, if you guys didn't catch the video I did yesterday, I do suggest you watch it. But I will also link this in the description of the video. During Wednesday's hearing, Representative Torres expressed concerns that the SEC had broadened its interpretation of an investment contract to mean anything the agency decides. Hence, his questions to the SEC chair revolved around an investment contract, especially with the SEC using the principle as a basis to allege that nearly all cryptocurrencies are securities. So, we're still in this problematic, phase. I want to call it a phase. I hope we get out of this phase soon. Problematic situation when it comes to cryptocurrency regs in the US. The SEC obviously thinks they have more jurisdiction than they do, and they're purposely being opaque when it comes to their rules, their guidelines. They're not really letting anybody in the crypto space, really give them any sort of sense of what they should or should not be doing. And, people in the crypto space, the developers, the companies that really want to develop and really want to work in the US are really having a hard time with that. Obviously, you guys know the history. So wanted to thank Wheezy for posting that. Luckily for Ripple, though, guys, they've been broadening out and building markets globally. Okay, this is from the DMI, the OMIF Digital Monetary Initiative. And Anthony Ralphs, a representative from Ripple, he was interviewed on developing the space, guys. This was just from yesterday, an interview from yesterday. Listen to what he has to say here.
I think where we're seeing this happen and these projects take off really is the sort of the economies that have perhaps underinvested over the decades in technology, might not have much in way of infrastructure, or actually who are looking to leapfrog. They might have something that is really not fit for purpose anymore. And so rather than replace in a very traditional, let's call it Western world scenario, are looking at alternatives. And again, I think there's a lot of parallels to innovation with the likes of Africa. Prior to getting into payments and banking, I worked in telecommunications. We weren't putting cables in the ground in Africa, we were putting mobile masts in. That in itself promoted a level of innovation and a lower cost way of rolling out services. A lot of the countries we talk to, that's their mindset. It's how do we create this platform for innovation and development and potentially exporting expertise and building economies on top of this, because they can see where the technology is going and the opportunity. So I think there's that. I agree with you, the timelines, some are going to be protracted. I agree, it's definitely not weeks and months, but actually I think it's small numbers of years of these. I think this is a change management process a lot of the time. You need to manage the risk, you need to control that and make sure that when you're testing stuff, and Daniel also mentioned about this, the happy path, everything that we're looking for is the unhappy path. What happens when something fails? If I send you money, does it reach you? If it doesn't, there's a problem. So how do I roll back that or mitigate that risk so that the money, there's always a terminal state for that money to either you receive it or I still have it in my pocket. And so part of that is working through. So we actually expect maybe in 2 or 3 years for smaller economies, emerging economies, but in the more developed economies, that could be a decade or so. I mean, you look at the RTGS sort of improvements that the Bank of England are doing. I think that started in 2016, 2017, and still going. So some of these programs are very long, and that's kind of that balance that we're trying to achieve here of how do we solve some small problems that allow opportunity to be realized whilst not committing fully, and then allowing that to be gradually phased into a wider societal deployment or infrastructure deployment within a country.
Okay, I'm going to leave the clip there. It goes on for another roughly 5 minutes, but I think you guys get the point here. I'm going to link this in the description of the video for you guys if you want to watch the full thing. Anthony Ralphs explaining how, when you're dealing with a region of the world that's already underdeveloped, it's going to happen faster. Development, integration, that can happen pretty quickly because you're kind of almost starting with a clean slate. You're starting from scratch, and so you can start developing properly. But with the infrastructure that's already there, with the developed Western nations, as he says here, sometimes those projects take a little longer. So, he's talking about a decade here. And so, if you're thinking about the real world utility for cryptocurrency over a decade, XRP right now sitting at 51 cents. We're probably going to see, that 3-4 digit XRP in the coming years. I mean, I'm not saying it's impossible, but, for now, guys, we got to focus on the spec run, because the spec run today is really where we're going to make our monies. We got to look at realistic targets. We got to look at the macro trend, everything I'm going to be talking about on my Patreon over the coming months. So I've even kept it fairly affordable, $5 a month. So you guys can follow me throughout this journey until we reach the top of the spec run, because I don't plan on cashing out until the top. I don't know about you guys. Wanted to keep moving, guys, but I guess first I should thank 801 Crypto for that great clip. Want to keep moving because Coinbase just released some new news. They received some regulatory approval to enable retail perpetual futures trading. So bit by bit, we're seeing the traditional players in the space get a little more leeway, a little more freedom to be part of the regulated system. Coinbase International Exchange has received regulatory approval from the Bermuda Monetary Authority to enable perpetual futures for eligible non-US retail customers. As the most trusted and safest name in crypto, Coinbase will operate with the maximum transparency, employ a robust risk framework, and meet the high bar regulatory and compliance standards of the BMA. Coinbase Advanced, a powerful retail trading platform, will begin to offer perpetual futures trading in the coming weeks as we expand access to regulated derivatives to more global customers. So that is essentially the news there, the highlights there for what is going on with Coinbase. I mean, it's all great news, pushing towards more of a regulated framework for crypto. Brian Armstrong from Coinbase also came out the other day on Squawk Box saying this.
In the Ripple and the Terraform case, the judge ruled that the underlying assets themselves were not securities. That's an important fact in our case as well. So, look, I mean, it would have been better if the regulator had simply published clear rules, had engaged in a rulemaking process as they're required to do under the Administrative Procedures Act, and that way we could all follow it. But in the absence of that, it appears now that the courts are going to have to come in and create some of that clarity for now, and I think ultimately it'll end up being Congress.
One of the things that you are doing is expanding internationally and doing so aggressively, I imagine as a function of the regulatory or tight regulatory body in the United States? Is that what's happening?
Well, Coinbase is based in the U.S., and we're not leaving the U.S. In fact, this is the biggest market for us, and we're the leader in it. But we also want to be an international company that allows us to, help many people around the world benefit from this technology as a way to update the financial system. So, actually, we do have a pretty exciting announcement about that. Today, we're announcing that our international exchange got regulatory approval to offer perpetual futures or derivatives trading to retail customers. And we're really excited about that just because it's a way to bring in a whole other set of people around the world, and actually in over 100 countries, who can start to participate in this more open and fair and free financial system.
When you look across the globe, do you say to yourself that other parts of the world are now much more favorable towards crypto? And I know you've made the argument historically that from an American perspective, you don't want to see American companies effectively move abroad.
Yeah, unfortunately, I would have to agree with that at this point, the U.S. is behind, severely behind, actually. So if you look at the other G20 countries, 83% of them now either already have crypto legislation on the books or it's in progress. It's being drafted, implemented. The U.S. is behind here, and we've seen the share of the U.S. job market around crypto shrink from about 40% to now it's about 29%. And it's due to this lack of regulatory clarity. So I think when I speak with members of Congress, I had a great meeting this morning with Nancy Pelosi, for instance, and a number of other meetings later today. The general broad consensus view, it's kind of common sense. It's let's get some clear rules on the book.
It's common sense, but it doesn't seem like anybody's really moving on it. They're still dragging their feet. Brian Armstrong says a few interesting things here. Firstly, you notice when he said Ripple's got regulatory clarity, or at least XRP, the XRP token has regulatory clarity. That's going to help Coinbase's case moving forward. The second thing is, that announcement that I had just highlighted here, the approval for perpetual futures trading, and it was from the Bermuda Monetary Authority. But this opens them up to 100 different countries. And so what he's saying is, guys, this is going to allow many more people around the world be able to trade cryptocurrency in a legal framework, under a legal framework with regulatory clarity. So when we're looking at the market cap here, 1.08 trillion, that could easily go to $10 trillion in this coming bull run. Well, what does that mean? Essentially 10xing the entire market. So a few interesting points here from Brian Armstrong. And I guess the last point, obviously, just, the same thing that we've all been saying. The U.S. is being left behind. And I mean, it doesn't help when companies like Ripple have to back out of a business deal from earlier this month. Wrath of Kahneman bringing this up. Ripple will not acquire Fortress Trust after examining the situation. Unfortunately, I mean, the XRP community got that news, got us really excited. Daniel here saying, I'm not really surprised, to be honest. Wrath of Kahneman saying, say more because of the breach. Who needs more SEC scrutiny or competing interests with other acquisitions? Cash. People are speculating about this, and so I kind of wanted to go over some of these points here, analyzing why it could have been the case. Daniel responding here, the whole thing felt a bit off to me, especially the we make everybody whole part. I can't put my finger on it, more of a gut feeling. Dan the Man saying, total speculation, but what if Ripple was afraid that Fortress could be hit with an SEC inquiry, and so it decided to back down from the deal of fear of being entangled into yet another SEC circus act? Well, that could in fact be the case too. Yeah, Wrath of Kahneman saying, yep, the Fortress executives are already under scrutiny as the failed Prime Trust execs could be a real house of cards. So, Michael Branch bringing us the official announcement here. Ripple pulls the pin on Fortress acquisition. This is what we know so far, guys. Ripple will no longer acquire chartered trust company Fortress Trust. The canceled deal comes a day after the news broke that $50 million of Fortress Trust customers' digital assets were stolen. The theft was later blamed on Retool, a third-party vendor that was victim to a phishing attack. So that could also have something to do with this. CEO Brad Garlinghouse made a statement on social media. And so Brad did come out with this statement a few weeks ago. We signed a letter of intent to acquire Fortress Trust. We've since made the decision not to move forward with an outright acquisition, though Ripple will remain an investor in Fortress Trust. The Fortress team is incredibly talented and has built products solving real customer problems. While this outcome is different from what was originally planned, we'll continue to support them and hope to work together in the future. So, I mean, I guess he's saying, without really saying it, that there could still be an acquisition in the future. It was on September 8th that Ripple did intend to buy Fortress Trust for an undisclosed amount, and it revealed to be less than the $250 million price for Medico, which it bought earlier this year. And so this basically just gives us what we know from Twitter. pretty much. But, I think Wrath of Kahneman here and Dan the Man are kind of onto something. I mean, there has been a bit of a circus within Fortress. These guys were the failed Prime Trust executives. If you guys want to know a little bit more on that, I did a video when Ripple did originally acquire Fortress Trust, and I will post it up here in the top right-hand corner. So some other points to make here with regards to this story. Zach XBT says this: the last line is unbelievable. Scott Purcell, who is part of Fortress, managed to lose his customer funds not once, but twice. So Purcell, the CEO of Fortress Trust, told Fortune magazine that BitGo had also been in the running to acquire his company. As you've seen from his Sour Grapes tweet, Mike Belchie has chosen to violate our NDA to essentially whine about me not selling the trust company to him. So could there also be some infighting? Ben Weiss down here saying, I wonder why Ripple and BitGo were both looking to acquire Fortress Trust. Whoops. Fortress Trust, when they knew about Purcell and the hack. I mean, to speculate, it could be that the guys at Ripple, Brad, seemed to think that it was a pretty good deal and that they could probably buy it for a bargain. Maybe after they did their due diligence, they realized, no, it's just not the deal for us. It could be because of an SEC circus, perhaps moving forward. Who wants another $100 million or $200 million legal bill? I really don't know, to be honest. Also part of this story, guys, Wheezy did post this back in January. SoftBank, which purchased Fortress from Mt. Gox before the collapse in 2017, invested about $10 billion into WeWork. So if you guys know anything about WeWork, there's been some controversy there too. When WeWork went public in 2019, the underwriters were JP Morgan and Goldman, and legal advisors were Simpson Thacher. Okay, so he's connecting this to the Ethereum guys, but it also makes me wonder. These guys were connected to Fortress too. So I mean, I suppose it's anybody's guess. This is clearly all speculation. The guys at Ripple obviously had their reasons. It certainly does not leave a mark on Ripple's reputation for backing out. If anything, probably a smart move. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.